What's up, everybody? Chris over here, founder and head trader at Pollinate Trading. Thank you for joining us. I'm going into crypto. I think we bottomed. But first, hit that like button. It's right there. Just grab it. Just go down and click like. Boop. I'll wait. Boop, please do. Yeah, me. Oh, yeah. Also subscribe. Why not? You'll get notified. All right, let's go for it. So we find ourselves on November 20th, 2021. In a bit of a pullback on crypto. Looking from left to right on my screen, we have a weekly chart of Bitcoin, a daily chart of Bitcoin, and a 4-hour chart of Bitcoin. Let me show you how much pain that this 4-hour really brings into perspective, just how painful it's been. Yeah, we were at 69,000 10 days ago. We got down to about 55,000. So 14,000 point move. Put that in perspective. We were, I think, right above 14,000 a year ago. So this entire 10-day period is about the price of Bitcoin a year ago. All of that. So just take that. We're trading at almost 70,000. So yeah, but just think about that for a minute. If you were in a year ago in November, you're probably like, meh, mildly entertaining. It's a bit of a pullback, no big deal. But if you bought over here at 64,000, or, even you can see people were buying up here for sure, 65, 68, 69,000, they're suffering through a lot. And it looks like capitulation happened right in here. And we seem to be putting in a bottom. Now, I'm just looking at a 4-hour chart here, but I'll break it down across all the time frames and zones and where we are in the philosophy and whatnot here in a second. But I just want to give you the paint the picture of how painful this has been. For Ethereum, it got up to 4,900 and down below 4,000, down to nearly 3,900. So a good 20% sell off there. Tough week, generally speaking, for a lot of people. I'll get into both of these here in a second, but let's take a step back and let's look at the bigger picture here, and let's just get context for where we are. Okay, I'm not trying to downplay any of this, but so in the philosophy that we run in the trading lab, we have we use some pivots. They're nothing fancy. The time frames that they measure are kind of the part that is important, as long as you match your time frame of the chart you're looking at with the time frame of the pivots. So this zone was the first 6 months of the year. So this would be 6-month pivots is what they're called. And then since July till December 31st will be this zone, right? So first half of the year, second half of the year. And let's see where we were November 20th, just to find out. Yeah, about 15,000, right about the amount that the Bitcoin lost in about 10 days period of time was the entire price of Bitcoin back then. So we've come a long way, of course. Now, what these are not magic lines. They're just proven. They measure the previous cycles and then they stack upon that. And what's exciting, what I enjoy about that is this here. So these crosses here would be the middle line of the previous 6 months high and previous 6 months low. So it basically goes and calculates the absolute low of the last 6 month cycle. And that's the line here. And then goes and grabs the absolute high of the last 6 month cycle. And then that's the line here. The middle is the pivot. It's just where, if you're on top of it, bulls are generally in charge. And if you're below it, bears are generally running the show. All that really is useful is just gives you a place to understand where the mentality of people are. We have things like the 155-day life holding average, these on-chain metrics of people who've held Bitcoin, 0.1 Bitcoin or whatever for over 155 days. It means they're no longer feather hands or paper hands, they're diamond hands, right? So every time we do, there's things that we need to pass through all along the way to give context. You know, I'm big on market regimes, and when we're in a market regime is simply telling you what the characteristics of what's going on are, so that next time you're in that regime, you can say, all right, let's look for these characteristics. And you go find trades and you go find positions, you allocate according to what is most likely to be happening in those timeframes. Right now, we're in a strong bull market. You know, we can pretty much see that, you know, go logarithm, it just keeps rising. And we're a week off of all-time highs ever, about a month off of our, you know, previous all-time highs ever. And then, yeah, we're about 6 months off our all-time highs ever. So it's a little bit different than, you know, what people expected. You know, last year, it just went powered straight up. And, you know, yes, this was a glorious bear market, but in crypto, things work a little bit differently, especially Bitcoin, because we have limited supply, we have halvening cycles, we have different participants than, say, an equity market. And so while this, you could say we went bull market, bear market, bull market, bear market, you know, you can have a bear market that lasts 1 week. You can have multiple ones of those throughout the course of time. We almost had a bear market. If 20%, the random arbitrary measurement of a bear market is down 20%, if that's your measurement, then yeah, we have a lot of them in these major cycles. And so, you know, again, you get in back at 10,000 back last, you know, a year and a half ago, or, you know, 13 months ago, I guess I should say. You get in at 10,000, you know, the difference between 69,000 and 59,000 is not really that big to you, right? It doesn't hurt nearly as much as the difference between 10,000 and 20,000 does, right? Okay, so first half of the year, we opened the first half of the year. Bulls took control, signaled a bullish breakout, confirmed a bullish breakout, tried to extend the trend, which is just some nomenclature that I like to use, could not do it. So we had to pull back. And where do we pull back to? We pull back to about the low, the high of the previous cycle, right? So that's where, when you finally break away from and you start moving into a bullish breakout and a trend extension, you start really taking off, that previous month high becomes support now. It's resistance and then it's support. So that's important, because we spent 3/4 so far of our time in this cycle right near the bottom of last cycle, and just have barely moved to the top of this cycle, the previous cycle high. But what's important is, once we're above the pivot here, the midline between last month and, or last 6 months high and lows, once we're above it, bulls have, you know, generally the tailwinds. They get a little breeze behind their back. And if you can be buying, if you can find opportunities to get long in this area, when the bull markets go, they get up into, you know, these levels. So everything from here is now a test. So we're testing our hypothesis that we're bullish because we're above that. So how do we confirm that we're bullish, and which means we can allocate more capital, or we can tighten risk, or we can maybe use different leverage. Don't use leverage trading crypto. You know, you can do a number of different things. So when you cross above this thing called MR1, market resistance 1, once you get above the first R1 pivot and close above it, that confirms the bulls have control. You'll notice that instantly what happened, as soon as we closed above it, pretty much right then, it just dipped. For the whole week, it's just been selling off. And in fact, by the time we got to new all-time highs at 69,000 last week, it pretty much started selling, flipped the new candle, a little bounce, and just dipped. Took it straight down, and we've been rallying up ever since. Another cool thing is, you see we have a bit of a troll bottom. So it put in a lower low over here. So middle skill traders are going to believe folksy wisdom and things that rhyme as to help them guide in their trading, because if it rhymes, and you've heard it a bunch of times in the market, then 100% of the time it's accurate, which couldn't be farther from the truth. The reality is, you get higher lows and higher high. You get lower lows and higher highs in a bull market. So getting a lower low here doesn't actually mean that you're trending lower. All that did was just run stops. So what's on top of all of this that a lot of people don't understand when they use technical analysis or they use on-chain analytics or all these sort of things, they don't understand that price action, the activity of traders within the market actually tells you what is happening. So you can see emotion, you can then see where people are doing things in the market. It's not very simple. It's very difficult. I've been doing this for 22 years now. So it's not something that you can just say, I'm getting into crypto and oh boy, here I am. Now I know what I'm doing. I read what the MACD is all about and I'm gonna do that. Plan B talked about RSI and well, that's it. That's the holy grail. It's not that. So it's a complex piece. And what's important, and especially what we do in the trading labs, we focus on not the actions. This is what the action is. Like you see all that, you see this top pattern. So you see a higher high that reversed and it goes down. That's the action. So higher high failed to go, shooting star, tears off down below. Now that's the reaction. So now I'm paying attention to this. I could care a little bit. When I'm looking at this, I'm looking at how it's reacting to this. When I'm seeing, this, it's in reaction to that. So I'm looking what currently is happening in relationship to what has happened, the reaction to the action. Whereas most people will say, oh, we touched this simple moving average or this trend line is holding, I'm buying at that trend line. Or if it goes below this trend line, I'm selling, which is not how I do it. If it goes below the trend line, that's the action. Okay, cool, interesting. But when it comes back up, if it rallies strongly back up to that trend line and right through it, well, then what good was that trend line? It just made you stop out of your position and then not buy back because it took off. So if you take a step back and look at the reaction to that action, then it's a lot cleaner. We'll see that trend line on Ethereum here in a bit. Okay, so on the 6-month profile, every candle is a week. So 1 week, 2 week, 3 weeks. And this measures the previous 6 months and then the variations on the different things. Bulls took control. So that's the action. Now, what I want to do is I want to look at the reaction to that, get a nice pullback, test the previous breakout high. And right now at the moment, it's, I put it out on Twitter earlier this week that we hit that we're bottoming. We did a video this week in the trading lab of, if we're bottoming or not. So at this point in time, and it may take, a few months to resolve, but this $14,000 pullback that looks to be being bought up by the people who you want buying up the market. And it's not just Bitcoin, it's Ethereum, it's everything is being bought at the moment. So it's not, there's a handful of noobs or a handful of people that, maybe sold over here that finally decided to come back in now that we're putting in all new all-time highs or something like that. There were the weekends here, but for the most part, there just wasn't much real selling going on during this. And in fact, the on-chain analytics was showing some of the opposite, but price action truly is telling us bulls are back. Okay. So now this is a 1-month chart. Each period represents a whole month. So this would have been, this would have been October. This would be November. Each bar is a day. So it's daily chart, very simple. You can see in October, September high was here. So this is the MS or MR1 for October, and this is MS1. So the September high was here. The September low is here. It took off, got above, you see, we got above the MS1 or MR1, which means bulls have taken control, closed above midpoint, which signals a bullish breakout. And then we hold a time filter above MR2, which says we confirm the bullish breakout, and it does. And then the next thing that it has to do, well, it can't do it that month, so it resets. Now we get into November, and again, MR1 is the previous month's high and the previous month's low. So the first day of last month, last day, whatever, of September was right there. And so that's the low. And so continuing it, we're slightly above the pivot on that. Bulls are kind of in charge generally, and bulls take control. Now, that's the action. What was the reaction? You can see on the daily that, well, this price action is not bullish price action. This was, all this was, but this wasn't. So something changed. So the action of bulls taking control and then losing control is the important thing. That's the reaction. That's where you actually gained the information here, was on this stuff, not on this, because this was like, that's the most bullish candle you can imagine. A bit of a breakout, a pullback, some shooting stars, solid close at the top of the range, opens at the bottom, closes at the top of the range, opens at the bottom, closes at the top of the range, all super bullish. Take a little pullback. But when this started happening, getting bigger bodies and big ranges, well, that's not normal. Something different is happening. And so you got your first pullback, tried to do it again. Bulls got it. They bought it down here and they closed at the top. And again, that's bullish. And then bulls lose control. And so that's the sign that something bigger is happening. And it did. And so we came down to the pivot, reset. Pivot is the difference between the previous month's high and low, not anything special other than that's like the middle. So if you were to say, I had 100 eggs, 50 of them were on the right side, 50 were on the left side. If I broke one on the left side, well, then I would, that would be the easier path, because now it's, instead of having to break 50 eggs, I only have to break 49 now, right? Same sort of scenario. You're just on top of it, so it holds. The fact that we're bouncing off of it is lovely. But that's right now, I'm looking to the reaction to this action now, because this was a different type of action that I was used to and expecting to see here. Now I want to see, okay, let's negate this. And so we got to get back above 67, 16, or whatever it is on Bitstamp, close, and that'll signal a bullish breakout. And then we'll take another run up at 74, close above 74. We signal a bullish breakout so that bulls take control, signal the bullish breakout, confirm the bullish breakout above 81,678. And if we can do that, then our next requirement, MR 3.5, is 117,266. So it has to go all the way up to MR 3.5 here to extend the trend. And if that happens, then that's where we get our parabolic blow off, or we reset into December. But we have a good chance right now. What's interesting, if you want to think about the, a bit of the game theory, Plan B has been talking about I think it was a $98,000 or an 89,000, one of those, Bitcoin by the end of November. November 20th, we're sitting here thinking to ourselves, there's no way that's going to happen. And if I have it up, do I have it? I don't think I have it up, but I had a chart of Bitcoin in, let's just have a look at Bitcoin back in 2017, what happened in November of 2017. So we can see November 2017, we had a 20% sell-off. So big sell-off. And then we went from basically, we regained it. So 7,600 to, we got up to, I'm pretty sure it was 10,000 at the end of November, somewhere around 10,000 at the end of November. It got up to 11,000 before the end. So I think it was somewhere around 12,000 by the time we got into December. So if that's helpful in any way, what that's saying is that, yeah, we could easily move from, it's funny how these rhymes too, 7,500 to 12,000. So 69,000 to 120,000 is totally possible. 100,000 is totally possible in the course of, a month. Let's just see, what it did by the time it recovered. It got from 8 to 12. So 50% move. That was a 50% move in the course of 2 weeks in last 2017 cycle of Bitcoin. So if you ask me, is it possible that we could get to this MR3 or MR2 87,000, MR3 and a half, Plan B's stock to flow ratio? Yeah, totally doable. And I have an example. 2017, it happened. In fact, we could probably look at last November too. So November high was 16.4, and where did we close the month? 16, about 19,000. So 4,000, 25% move. Totally doable. In fact, what did we do in November? If we just look, close 19,380 and close at 33. So we did over a 50% move in December of 2020. So this is not unexpected to have a pullback like that, like we had this week. And it's not unexpected that we could see that 98,000 that Plan B is talking about, or more of what I like to focus on is getting back to where bulls have control above MR1, close above MR1 and a half at 76,378, which will signal a bullish breakout, which will start. What that means is bulls are going to start just buying. They're not going to, they're going to stop saying that they're waiting for dips. Because if they didn't buy here, they're not buying dips. They're thinking that something like this is going to happen. They think that we're going to get another move down to 44 or something like that. Look, it may happen. But the people that are, once we get above MR1 and a half, what's going to happen in traders' mind, in people's mind, is they're going to start looking at it saying, okay, now I just got to own it. And that's where you start getting these moves rapidly, because they buy breakouts. They start chasing it because they're worried about not owning it. They're not worried about buying it too expensively. At that point in time, they're just worried about not owning enough of it. And when we get when bulls take control, that starts to happen. It looks like this a little bit. Looks like this, especially. And then when we get to above, as you can see, it looks good here on the red MR2. You can see it got really, people back in February, the first part of the year, people got really scared that they were going to miss Bitcoin hitting 200,000-300,000. And that's where you get a top like that. So as we get above, and you see this was MR1 and a half here. We closed above it, pulled back, and then blasted off. So we closed above it, pulled back, and we would look for a blast off up to the point where we get above MR2 or MR1 and a half. And when that happens, then people start saying, I need in. And once we get above MR2, that's when they're just buying on full on anything. It dipped 1 cent, I'm buying. Like everybody's just market ordering up here. So that's how you get to 100 pretty quickly. And then finally, let's have a look at the weekly profile. So each pivot level measures the previous week's high. So you see the high of last week's right here, and the previous week's low, which would have been here, and then the middle of that. So last week, bulls took control, signaled a bullish breakout, confirmed a bullish breakout, pulled back, ripped up, immediately failed. So that's your first indicator there that, well, something's very different here. Something's very, very different, because the action, this action is very bullish. And this pullback got bought, narrow body pullback all the way through, got bought, and then that got dumped hard. So what does that tell you? That means that something's, the reaction to this totally normal pullback buy was, the reaction to it was off. Something was wrong. And so that's where you get this sort of stuff happening. A huge, massive, just pile of selling for, a day after some pretty good buying, just big. It almost gave up the entire move from there. Okay. And then the continued selling, and then they let off a little bit, and then it really got aggressive. So I was told by some trading desks that I talked to that somebody was working some big orders, not really working them very well either. They were kind of market dumping, and then they would ease up, and they would like what I did in 2018, exactly what I did. Sorry, everybody, in 2018. Okay, so where are we at right now? Below the pivot, so generally weak, which you can see, not generally, very. Moved below MS1, market support went the previous month's low, moved below there, bears take control, move above MS1, close below MS1.5, signals a bearish breakout, holding our time filter below MS2. That confirms a bearish breakout. Made an attempt, couldn't go any lower. We reversed, and now we're back up into this area here, and we'll see what it does. We'll see what it does. It's not conclusive, but then again, this is just a weekly profile. This isn't nearly as important as any of the other profiles that we were looking at. The 24-hour has a lot more power than the 4-hour candle. The weekly, or let's say the 6-month profile, is far more powerful than the 1-month profile, is far more powerful than the 1-week profile. So all that stuff is what we're looking at right here. So for me, I could see absolutely a way where we could get to summarize, where we could get to, within the next week or two, get ourselves up to 80, 90,000, possibly. Doesn't mean it happens. I just say that I see it as a pot. It could totally happen. It's done it many Novembers and Decembers in history. We are at a bit of a lengthening cycle. And, maybe it doesn't just face rip and peak in December. Maybe we just keep drifting and drifting. We do this, 2 steps forward, 1 step back, 2 steps forward, 2 steps back, or 1 step forward, 2 steps back, and just keep boom, drifting and consolidating. Because this is definitely not, let's get it here. This is not blow off top pricing and blow off top price action. That's not what it looks like. This is not what extreme greed and fear looks like. It looks like just, you see candle bodies. If your biggest candle bodies on the run up, you see 2, 3, 4, 5, 10 times the size in a single body. So if this is our, let's say 7%, these candle bodies are our biggest candle bodies. Let's go log. If these candle bodies are our biggest candle bodies along the way, notice that the ones at the bottom were even bigger. That was 9.9. This is 7.4%. So at the beginning of the move, they're strong. At the end of a move, it doesn't peter out. This is weak. That's just general consolidation. But what you get at a major market top is you're not getting 7% moves. You're getting 20% moves in a single day, in a single candle. That's what market tops look like. And they're multi-directional multiple times in that candle. Let's have a look at Ethereum. Sorry. Let's get set up here. Not that. There we go. Okay, this is our 6-month profile. Previous 6 months high is right here. Previous 6-month low is right here. We're on top of the pivot, so bulls are in control. We close above MR1. I'm sorry, generally bullish. Bulls take control. This is very bullish right here. This buying that we're seeing in Ethereum at the moment, still my favorite asset right now for the big caps. It's still Ethereum. Absolutely bullish, way more bullish than Bitcoin. But then again, that doesn't matter. Bitcoin can still just suck the life out of everything. You have a multi-billion-dollar buyer step in, like we saw in January or in the latter half of 2020. Yeah, that needs Bitcoin. That's how you see it. I think we've had large buyers on the corporate side of Ethereum this year. So we're starting to get some of that same spillover in those markets. But right now, so what's bullish price action? A breakout to new all-time highs and consolidation right around all-time highs. Yeah, we got to 4,900 and yeah, we got to 3,900. but we're right back up here. So what would be, this is bearish price action. This is, and notice, okay, our big candle, 33% in a single week. Previous candle, 27. That's blow off top. That's a blow off top right there. And what's awesome about it is we recovered it in about 6 months. So less than 6 months. But this is what you see at a blow off top. This isn't what you see at a blow off top. This is a 27%. You go from 2,300 to 4,500, 4,380. So almost 100% move in 2 weeks, 2-3 weeks. That's what a blow off top looks like. So 100% move in 2 to 3 weeks on Bitcoin is you're looking at 150 or so, 130, $150,000 Bitcoin in relationship to that. So this is more what we're looking about when we're looking for these blow off tops. Okay, back to it. We go up above the pivot. Bulls are happy. Bulls take control. Up next, 55.12, getting a close above that will signal a bullish breakout on the 6-month time frame, which is the master of the show. And then 66.45 will confirm the bullish breakout, and then we can go all the way up to 12.141 to extend the trend, which is how you could end up getting 12,000 is where you could get a blow off top, and that would be some. We would have to watch the profile by then. But right now, if we were to reset the profile, it would be 17 to 48. So this would be a smaller range. And we could just, we may not ever see MR3.5 again this cycle. So ranges are too wide. I'll get into the details of that some other time. Okay, each profile period represents a month. Each candle represents a week. I'm sorry, a day. So we would have 4, not 30. So right now, this line right here was previous month's high. 44.60 was the previous month's high on the Bitstamp exchange. We got above it and we, stayed above it. So bulls are in control, all excellent price action at new all-time highs. Okay. When this happened, I'm like, okay, this is odd. We're selling, but we're still at, if we take this whole period as a whole, that's still consolidating at all-time highs. So not horrible. It's just concerning seeing, these big down moves after the price action of really good up moves. Now, a lot of people were doing this. I don't know what the exact trend line was that everybody was drawing, something like that. And that's where we had this dump. Now, here's a lesson in trend lines. The thing about diagonal trend lines is that they're so super subjective. They're very subjective, because every single person has to put their anchor points at the same place for it to be meaningful, right? Just because I draw this trend line doesn't mean that this trend line is going to be, it has to hold. Now we get that into because somebody could see a different trend line. They could see, they could have seen this could actually be the trend line that everybody's looking at right here, right? Let's try to do that. There we go. So now it lines up. You just keep finding places to where the trend line breaks and where it actually works or where it doesn't work. So trend lines, diagonal trend lines are not really that useful. The thing that makes them useful is because they're self-fulfilling. People see them, people draw them, people do stuff. And then, they share them and other people do it. And, especially when a trend line, a diagonal trend line is obvious like this one was in that short period of time, a month and a half or so, it was a very obvious one. So I think that might've been what caused this. And of course, Bitcoin selling and everything like that, all that other stuff. But a lot of this becomes self-fulfilling simply because people go after it and they draw these lines that are obvious to see. Now, what's less subjective, because it isn't what just some line that you drew, and hopefully your rendering of it is the right one. At least horizontal trend lines are useful because they're absolute, right? If you're horizontal, if this was your swing high, if this right here was your high, then that was your high, right? That's your high. The slope is irrelevant, really. People could make it relevant, but the actual price itself being a new high is the thing that can't be lied about. It can't be adjusted. It can't be interpreted by anybody else. The actual number itself is where accuracy lies. Okay, so Ethereum, very, very much bullish, a lot more bullish than Bitcoin. Up next, we want to get above 49.20 to close above midpoint. MR1, MR2, that's where we start getting into bulls really like paying for it at market. And then when we get above MR2, that confirms the bullish breakout. And that's when market orders are a lot more prevalent. People down here, people are using limit orders to buy. They're just, letting dips come in and creating magic lines. You see how the 4,000 level was held, big round number. People like to put stops at big round numbers. So they put 4,000 there, and then it dips, and then it turns around and rips. And now everybody who got stopped out here has to chase it. Shorts will have, shorts that got short here will have to stop out up here. So when we get up to the, the break level, whatever it was, shorts are going to have break. They're going to be at break even, and a lot of them will leave, but some of them will keep their stops at all-time highs, right? Because if it puts in a higher or a lower high, as the folksy wisdom says, then it's bearish. So they'll want to stay in here. But what we do is we run those stops as traders. Like I run those stops because I know that's where people have their stops, or at like 4,000 or at 5,000, these even numbers. A bunch of people are going to have sell orders at 5,000 on Ethereum. So we'll hit 5,000, it'll get spazzy. And then that's action. We let the action happen and we wait for the reaction after that. Let's have a look at the intraday here, the 4 hour. That's our trusty trend line that broke. And you can see everybody who had that trend line on got ran, and then it ripped. And so they stopped, and then that's where they really got hurt, right? You can see that they got trolled out of it. So here, as a trader, what I'm looking to do is I'm looking to buy under that line. So while everybody, what's happening is everybody else who's, the middle skill traders are sitting here thinking to themselves, okay, I need to, if this breaks, I'm going to sell, I'm going to short. And so they sell, and then it doesn't actually, they're not looking left, right? They're not seeing they're looking at these diagonals. They're not looking at what's really the context. So they sell, I buy, I catch this, we take this stops out. So any of the shorts who did get short have stops right here, because that's the first logical place to do it. And then I'm selling into their wallets they have to buy their short to cover, right? So I'm selling while they're buying. So it's perfect. And then it breaks. And there's no end in sight. I may do the same buy again and have to take a stop. That's fine. I catch this big move, take a small move, whatever. I don't like to play diagonals, so I probably wouldn't have even shown up to work for any of that. But it's just important to see that as a trader, you're going to get taken advantage of by using these obvious locations, because that's where people like me who are comfortable with markets, I'm going to go in and say, okay, yeah, I know that this stop's going to get ran, so everybody's going to panic sell, and I'm just going to buy it. And it's, everybody's going to, it'll reverse. It's just the ebb and flow of these shorter time frames. Okay. Okay. Below the pivot, generally bearish. Bears take control, confirm a bearish breakout, signal a bearish breakout, confirm a bearish breakout, fail to extend the trend, which would have been, we'd have to get below 35.7192. I knew that was a low probability thing. So when we started to get this bottoming earlier Thursday or Friday, when I put out my tweet calling the bottom. I didn't really call the bottom. I thought it was the bottom. So I figured I would share it out. It was a good logical place that bottom would start forming. Now we can get, we could spend the next couple of months just banging around this bottom area too. It's not the exact bottom tick. That's not my job. That's not what I claim to do. But when I see things like that, that's a blow off. That's a hard sell, bit of a bounce. That's like as hard selling as you can do. And they lost it. And because remember, once bears take control here, they can start doing market order sells. So it's less about limit orders. It's more about just selling at the market, right? So shorts are just selling at the market in here. They get sloppy. And then it's easier because these markets have different incentives that say like a currency, real currency markets. There's limited supply. It's not a fiat currency. There's all these sort of things that make cryptos by design built to go higher. And so it's a lot harder to catch these down moves, especially when we're in the major macro bullish moves. So can't do anything. We got it. So once we confirm the bearish breakout, in order to further, the next step in that test is a close below MS 3.5. So there's a bunch of things right in here that are easily testable. Bears take control, bearish breakout confirmation. So bearish breakout confirmation means we're going to get a big one. And if we don't, we're back into where we're supposed to be. So when these happen in a bull market, these are your gift. These are your gift. This 43, well, actually, anyway, from anything below 44 is a great buying opportunity because this is all going to be artificial selling. This is just messiness. These are poor traders getting stopped out. And then anything below MS 1.5 to get long, anything below MS 2, and anything in here, especially if you get really nice price action, like a shooting star that fails and gets face ripped, and another shooting star that fails, doesn't, and rips. These are all opportunities to get long with positive confirmation of your hypothesis that we go higher, because we're just in a bull market. You've got to be long. So these are running the show right now. There's 1,000 different alts out there. There's a bunch of side chains. There's a bunch of layer ones and layer twos. There's a bunch of DeFi. There's a bunch of staking and mining, and there's so much going on in crypto right now. I'm going to stay focused on Bitcoin and Ethereum with this because these two lead the market. If these two are healthy, our market's healthy. You can keep playing your altcoin game if you want. One really interesting way that we've been doing it is rotating through the different sectors. We kind of see what's right now, everything's just kind of moving up together. This would have been the last 12 hours. This is the last 12 hours or so. And you can see everything kind of it all trades the same. You can see it all kind of trades the same. Though we had some of the privacy coins got a little bit of a bid yesterday afternoon. But right now everything's, up somewhat similarly. And really the last 3 or 4 hours in my time, we had a big spike reversal again. So you can see it, this would have been Bitcoin, Ethereum. This is two baskets of altcoins. And they're all trading the same way. So instead of doing all the different different alt pairs, all the different currencies out there, I'm just going to do the two biggest ones because this will give you the most amount of information. Now, if we're talking about one-offs like AVAX or SHIB or Doge or Loki or any of those that are that really don't trade along with the general market, that's on you. That's gambling-y type behavior. No judgment on by any means. It's just you're not going to gain any information from you're not gaining any information from this information here, other than if Bitcoin and Ethereum really start taking off, most likely everything else is going to take a pause. So, all right, guys. do be sure to hit that like button. Make sure you're subscribed. If this was useful, please share it out to a friend. Make sure you're subscribed, pollinatetraining.com, to the free newsletter. I'll be covering this stuff regularly. We've got a new momentum trading strategy we're getting ready to release. It works in equities, it works in futures, it works in currencies, and it definitely works in crypto. We'll be releasing that this coming week. And yeah, hopefully we can get that out to everybody. And well, hopefully you get a hold of it, because this thing is killing it in such a way that I even took some money out of my crypto account to put back into an option account to trade this thing. It's incredible how, and I'm saying the better opportunities in trading this new strategy on options than it is leaving it in crypto. So that's kind of something interesting. Though, right now, plenty of, the majority of my my risk capital's in crypto here. So getting back to it. All right. Love you all. Have a wonderful weekend. Let's make it happen, folks. And